Hey there, everybody. Brian Hoops here, Midwest Market Solutions Insider TV. It is Wednesday night, December the 6th. Thanks for joining us here. This is a chart of feeder cattle. Notice here, just right at the end of November, we had a bearish reversal day. We had one on Tuesday, and we followed through to the downside once again. Now, we look at the live cattle chart, pretty much the same thing. Bearish reversal day, November 30th. Bearish reversal yesterday, follow through today. We are finding support in the live cattle down here about 119.07. I think we will open lower tomorrow. And you see this big seasonal downtrend. We've been talking about this. This is a big seasonal down move till about the 13th or so of the month. Then we start to move higher. So we're already testing this area. It's very possible we are going to ultimately test 116.27. That's almost $3 lower yet before we find good support here in this cattle market. And then we should see the end of the seasonal selling pressure. But fundamentals are going to be a little negative here in the next several weeks, with packers using the holidays to keep the pressure against the cash markets. They don't have to buy as much cattle. This is the same as true of the hog market. They don't have to buy as many hogs. There's plenty of supply out there. You've got less kill days, and so you just back off your bids and increase your margins, and that's what the packers are going to do going forward here. You can see this hog market weakening as well. You've got a lower high here and a lower low here in the last couple days. So this is a start of a little downtrend, and this is a seasonal pattern that turns lower just like the cattle till right into this mid-December time frame, 18th to the 22nd. Then we turn a little bit better. So would look for this hog market to come back down and probably test some technical support, which, really good support here at 66.30. That's a couple dollars, $2.50 down yet in the next week or so. Cash cattle trade pretty much, I think, wrapped up for the week. 117 to 118 and 187, 188, $3 to $4 lower than last week. And in the grains, we have seen really market weaken here, go nowhere. Corn down today, third consecutive down day. We're going to find support at this 349 area, I think. Not much news out here, not much export business. Soybeans backed off of the highs here. There was some news that USDA changed the export amount previously sold on November 30th. It was a 525,000 metric ton bean sale. Now it's 363 to China. They just changed the amount. That was a little weak, and we were down here for a while, came down, filled a gap right in here. I'm going to highlight this gap, make it a little bit larger so that we can see it easier. Right here, there's a little tiny gap above the highs from December the 1st here, and we went down and filled that and then bounced up. So positive from that standpoint. And meal had an outside day lower, but really not much lower at all outside day. But then we basically an even close. And this, look at this market all the way back to these areas, testing these highs from July. That's where this chart breakout is. We get a pullback into this area, 331. This is off the January contract. I think there's going to be a lot of buying interest there. Stops be below this area. So kind of a high risk market, but pretty bullish here from a fundamental and a technical standpoint. And opposite of that is wheat. As we look here, we're testing contract lows. Stats Canada numbers came out today, and those are bearish, well above expectations. All right, have a great night. We'll be back in the morning with our newsletter. Talk to you again soon. This has been Brian Hoops from Midwest Market.